There's been a greater focus on local economic fundamentals in recent months, and that's exactly what guided the South African Reserve Bank when it cut interest rates by 25 basis points last month. Inflation remains below its target range of 3 to 6%, giving the bank some room to maneuver. But while inflation looks manageable in the short term, the Reserve Bank also flagged possible risks, including geopolitical flare-ups and trade tensions abroad that could quickly change the picture.
This was based on a global slowdown triggered by escalating trade tensions where the rand depreciates sharply. The scenario showed how a country with some fundamental vulnerabilities like South Africa risks stagflation, with growth moving lower while inflation rises due to currency weakness. In these conditions, monetary policy tightens to stabilize the macro economy.
It's a lesson South Africa learned during the early months of the Russia-Ukraine war. Between January 2022 and August 2023, the rand lost more than 20% against the dollar, partly due to capital outflows and higher global risk. That weaker currency pushed up the cost of imports of everything from fuel to food to fertilizer. Wheat and vegetable oils in particular saw sharp price hikes. South Africa, which imports about 40% of its wheat, felt the pain in the form of high food inflation and rising borrowing costs. National Debt Advisor consultant Dehan Shearman says the bank now faces another tough balancing act as tensions rise between Israel and Iran.
That's essentially their mandate, is to protect the value of the currency and to protect the economy through monetary policies.
He warns that South Africans need to pay attention, especially those with debt or savings. If the global situation worsens, the SARB might be forced to hold off on further cuts or even raise rates when it meets in July. Global oil markets are already jittery, and there's growing fear that key shipping lanes like the Strait of Hormuz and the Suez Canal could be disrupted. These routes carry a fifth of the world's oil. If blocked or slowed, fuel prices could surge.
Depending on the way that consumers use credit depends on the trends. So we might be able to see like a decline in payday loans, but then an increase in credit card usage, or an increase in personal loan finance. And it all speaks to how consumers are using these different types of credit to fund their lifestyles and to fund their day-to-day, expenses.
The Reserve Bank will release the first financial stability review for 2025 in Sandton on Thursday. Published twice a year, the FSR looks at what risks threaten South Africa's financial system and how the bank plans to respond. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.